Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're taking an in-depth look at the latest insights from MercadoLibre's Q2 2025 earnings call. That happened back on August 4th, 2025.
That's right. And our source material today is the corrected transcript from that call. We've got input from their CFO, the presidents of commerce and fintech, and of course, the analysts asking the tough questions.
Exactly. And our mission really is to unpack the big stuff, the key financial moves, the strategic decisions, and figure out what it all means for MercadoLibre's path forward, but also, for the wider digital commerce and fintech scene in Latin America. Because what really jumped out, I think, wasn't just the strong numbers, though they were strong.
Definitely strong.
But these really ambitious, maybe even counterintuitive strategic plays they're making. It makes you wonder, how are they pulling this off in such a dynamic market? And what can we learn?
It's a great question because, well, when you look at those top-level Q2 figures, they really do paint a picture of impressive and consistent execution. You're talking revenues up over 30% year on year.
Wow.
And income from operations hitting a record $825 million. That's significant.
$825 million, yeah.
And these aren't just numbers in a vacuum. Management themselves, they pointed to this strength and consistency of execution. And crucially, their disciplined investment approach.
Right.
For a company in markets like Latin America, which can be, high growth, but also volatile, achieving that stability and profit while growing so fast, that's really something.
That phrase, disciplined investment approach, it does stick out, doesn't it? Especially with that kind of growth, you often expect maybe a more growth at all costs kind of thing.
Right.
So what does that discipline really mean for them? Why is it so important here?
It's absolutely key. And it shows a certain strategic maturity, I think.
Yeah.
It means they're not just, spraying money everywhere, hoping something works. Instead, they're strategically putting capital into areas they think will give the best long-term sustainable returns.
Makes sense.
Their focus is clearly on three main pillars. Commerce, their core e-commerce business, fintech, Mercado Pago, which is almost its own powerhouse now,
Right.
and advertising, which is, well, it's quickly becoming a much bigger, high-margin part of the business. So this focused discipline lets them expand aggressively in these specific areas, but without, wrecking their overall financial health.
So it's targeted growth.
Exactly. Building this robust, diverse ecosystem, but always with an eye on profitability and market leadership, not just chasing revenue numbers. It's like playing chess, making deliberate moves for the future.
And it seems like that discipline isn't just showing up in the financials, but also in how people are using the platform. The call mentioned engagement is up across all areas. That feels like more than just a nice-to-have metric.
Oh, absolutely. It's far from just a footnote. It's actually one of the strongest signs of their long-term potential. When engagement rises everywhere, people buying more, yes, but also spending more time, using more Pago services, clicking on ads. It signals the fundamental strength and kind of the stickiness of their platform. It tells you people aren't just doing one-off transactions.
You're integrating it.
Precisely. MercadoLibre services are becoming part of their daily lives. They're not just selling stuff. They're building a digital lifestyle habit for millions. Think about that, onboarding huge parts of the population into the digital economy, making online transactions just normal.
Like breeding almost.
Yeah, exactly. And this higher engagement, it reinforces the network effect. More users mean more sellers mean more users. It's that classic virtuous cycle. It's a fundamental shift, moving beyond just price or selection to ingrained consumer behavior. That kind of platform strength builds a serious competitive moat, very hard for others to cross.
That's a great way to put it, a digital lifestyle habit. Okay, so these impressive results, the deep engagement, they don't just happen. They come from these bold strategic moves. Let's peel back the layers, starting with e-commerce. One of the biggest things mentioned was in Brazil. They lowered the free shipping threshold. Again, for the third time in 5 years, right?
That's right.
Down from 79 Brazilian reals to just 19.
19.
That sounds incredibly aggressive, especially for such cheap items.
It is bold, very bold,
Yeah.
but it's also very deliberate, very calculated. The goal, as they put it, is to keep bringing offline retail online, removing friction points.
Okay.
Think about the psychology. A 19 real free shipping threshold. That means even really low-value stuff, things you'd normally just grab at the corner store.
Yeah, like toothpaste or coffee.
Exactly. Now potentially eligible for free delivery to your door. It's not just about convenience, it's about fundamentally changing habits. making online shopping accessible for, well, almost anything.
So who does that attract?
Well, multiple impacts. First, it's a magnet for new users. People who maybe thought online was too expensive for everyday stuff, suddenly it's viable. Second, it boosts engagement for existing users. They shop more often for a wider range of goods, not just electronics, but daily essentials.
Right.
And third, it expands their assortment. More sellers, including smaller ones, can now offer lower-priced items attractively because of that free shipping. It's really a land grab for the long tail of retail.
Did they share any immediate data? A move like that must show up quickly, right, in terms of usage.
They did, yeah. And the early results are pretty compelling. The new policy was only live for a few weeks in Q2, but even then, they saw accelerated GMV gross merchandise volume growth in Brazil in June, right after they implemented it.
Okay.
And even more striking, the number of items sold in Brazil jumped. It accelerated to 34% year-over-year growth in June.
34%.
Just for items sold.
Yeah. It tells you the strategy is hitting a nerve quickly and powerfully. The demand for these cheaper items with free shipping, it's clearly immense.
Right.
That acceleration in items, though, especially with potentially lower average selling prices, ASPs to these things,
Yeah.
it might make you wonder about the profit on each sale. How do they justify this as long-term value creation? They have done this before, haven't they?
They have, from 120 down to 99 reals, then 99 to 79.
Right. So what do they learn?
This isn't their first rodeo with this strategy, and that's exactly why they're confident. Management is very clear. This isn't about the margin on one single low-ticket item. It's a strategic investment. It's about building, quote, relationships with users, not just transactions.
Ah, okay.
They've seen it over and over since 2017. More free shipping leads directly to better customer satisfaction, better retention, higher purchase frequency. Each time they lowered the threshold before, it increased engagement, loyalty across the whole ecosystem. It expanded their market and made users stickier. Now, it's true, as they said, purchases between BRL 19 and BRL 79 on a standalone basis will have a range of margins. Not all of them will be positive.
Right. Some might lose money.
Not all of them will be negative, but their overall expectation is that the whole initiative will be net positive for the P&L in the longer term. The thinking is, higher engagement leads to more total purchases, more loyalty, more chances to cross-sell Mercado Pago, credit ads, which all helps the bottom line eventually.
Go capture the customer first.
Capture the customer, capture a larger share of their total spending, and bring a whole new slice of retail online that felt too expensive for delivery before. It's a play for market share and lifetime value.
Okay, that makes sense. Focusing on the long game, the lifetime value. Now, alongside this free shipping change, they also tweaked seller fees, cut fees for items between, 79 and 200 brails.
That's right. Around 200 million was the upper bound mentioned, but the key range was just above that new 79 threshold.
And this was to smooth out a cliff edge in take rates. What exactly does that mean?
Yeah, the cliff edge. Imagine you're a seller. You price an item at 78 reals, you pay one fee, price it at 79, just over the old free shipping threshold. And your fees used to jump disproportionately because of how shipping costs were allocated. That sudden jump was the cliff edge.
Ah, okay. Discouraging.
Very. It discouraged sellers from pricing things right around that threshold. They'd either stay below it or price much higher to cover the jump in fees, making them less competitive.
Right.
So by smoothing this curve, cutting fees in that specific BRL 79 to BRL 200 range, they're encouraging sellers to offer more stuff in that important mid-price bracket. They actually tested this last year in some categories, the results. Merchants lowered prices and, importantly, brought more selection to the platform.
Interesting.
And what's really compelling is that these positive effects apparently get stronger over time as sellers adjust and consumers respond. It's clever aligned seller incentives with what's good for buyers.
And for us, the buyers, did it mean lower prices? Or just more stuff to choose from?
Both, actually. The president of Commerce said explicitly that most of the lowering in take rates were passed into pricing,
Oh, great.
resulting in a clear reduction of prices for consumers. So yeah, it's a win-win. Sellers get a better fee structure, more incentive to list competitively, and we get lower prices and more choice, especially in that mid-range, right above the new super low free shipping level. It just makes the whole marketplace better.
Okay, so Brazil's pushing hard on accessibility and seller alignment. Let's switch gears now to Mexico.
Yeah.
Mexico was also called out as a standout in Q2. Sharply accelerated GMV growth, fastest increase in items sold in nearly 2 years. What's fueling that fire?
Mexico's strength came from a mix of things. Specifically, they mentioned strong growth in both their 1P first-party business, where MELI sells directly,
Right.
and their cross-border business, which is international sellers selling into Mexico via the platform.
So multiple engines firing.
Exactly. The 1P lets them control the experience, make sure popular stuff is in stock. Cross-border massively expands the product selection, bringing in things maybe not available locally. It shows their multi-pronged strategy is working there, hitting different market segments effectively.
So back to this low ASP strategy in Brazil and just the overall focus on selection. How do they feel they stack up against competitors now? Especially in Brazil, it's a tough market. Are they still confident they have the widest selection?
They seem very confident, yes. They believe they generally offer the widest selection in Brazil, which is a huge differentiator. And this new BRL-19 free shipping policy, it's actively bringing in good traction on new sellers and new live listings, specifically for those cheaper items.
So it's reinforcing that wide selection.
Precisely. Reinforcing their claim to be the place for basically everything, not just big-ticket items, but everyday stuff, too. Expanding the definition of what you buy online.
But, okay, expanding into these really low ASP items, BRL 19 maybe, with free shipping, that must hammer their logistics, right, their delivery network. How do they handle that volume and cost?
Yeah, the operational side is absolutely critical, and they addressed it directly. They are actively scaling infrastructure, warehouses, sorting last-mile networks, and adapting operations for the shift towards more smaller, cheaper items.
Wow.
Well, one specific innovation they mentioned is using slow delivery with wider delivery promises.
Okay.
This has apparently just started, so there's probably more optimization coming. But the idea is, for these low-value items, offer maybe a 5-7 day delivery window instead of 1-2 days.
Right, more flexibility.
Exactly. That flexibility lets them consolidate shipments, run fewer, fuller trucks. It drastically improves efficiency and lowers the per-item delivery cost. Makes these low-value sales more economically viable.
So the trade-off is time for free shipping.
Pretty much. Consumers get the free shipping, MELI gets to manage the logistics cost-effectively. It lets them reach into segments that were just too expensive for fast premium delivery before.
And back to the profitability of those individual cheap items.
Yeah.
You mentioned the relationships, not transactions idea.
Right.
How does that really play out on the P&L when some sales might be losing money?
It's really about that underlying philosophy. They're not just looking at the margin on one BRL-19 sale. They're looking at the bigger picture, the downstream effects. So a user buys something cheap with free shipping. Maybe that specific sale has a tiny margin or it's even negative after fulfillment costs.
Okay.
But that purchase gets the user onboarded, they experience the convenience, now they're more likely to buy other higher value things later or use Mercado Pago, or maybe even get a credit card eventually.
The ecosystem effect.
Exactly. That increased engagement across the board, more purchases overall, more loyalty, more cross-selling. That's what ultimately benefits the consolidated P&L. So while, yes, some BRL 1979 purchases might not be profitable individually, the overall initiative is expected to be net positive for the P&L in the longer term. It's an investment in building that huge engaged user base. They'll absorb some short-term costs to win long-term loyalty and market share.
Given how well this seems to be working, or at least the early signs in Brazil,
Yeah.
is it logical to think they'll just roll this out everywhere, like Argentina and Mexico?
That's what you might think, but they were pretty clear. Every market is different.
Okay.
A one-size-fits-all approach just doesn't work. The dynamics, the competition, the value proposition, it varies a lot across Latin America.
So,
Well, take Brazil. They have the Melamies cashback program, which is a big value add there, not necessarily the same elsewhere. Fulfillment penetration is different too. Mexico's the highest, more parcels handled by MELI's network. Brazil's in the middle. Argentina's the lowest, relies more on third parties. That massively impacts shipping costs and feasibility.
right, logistics capabilities vary.
Exactly. Plus, the local economy, competitors, payment preferences, it all matters. So while they learn from Brazil and evaluate, they have no hard commitment on executing one thing in the other place. They'll look at each market on its own terms, use data, see what makes sense locally before making big changes. It's pragmatic, not just copy-paste.
That makes sense. A tailored approach. Okay, this focus on relationships and market penetration in e-commerce. It really echoes in their fintech arm, doesn't it? Let's pivot to Mercado Pago. They hit 68 million monthly active users in Q2. That's huge. What's driving that growth?
It's a powerful mix, really. The natural synergy with the e-commerce platform, plus some very smart targeted marketing. They ran these big celebrity-led campaigns in Brazil, Chile, and Mexico. High-profile stuff.
Huh.
And these weren't just for brand awareness. They were designed to drive active use of Pago's services payments, managing money. They partnered with popular figures, built trust, reached a massive
That
audience.
work?
Seems like it. Combined with organic growth, the impact was pretty clear. They doubled assets under management again year on year. People are trusting Pago with more money.
Doubled again. Wow.
Yeah. And they saw drastically improved downloads of the Pago app. So the marketing's bringing new people in and deepening engagement with existing users, making Pago indispensable for daily finances.
Speaking of indispensable, their credit portfolio is exploding. Over $9.3 billion, up 91% year on year.
Astonishing growth.
And credit cards specifically, up 118%. But with that kind of growth, you always ask about quality, about risk. How healthy is this rapidly expanding credit business?
It's incredibly encouraging, actually, given that speed. Management said the quality is robust. Their NIMAL net interest margin, adjusted for losses, that key profitability metric,
Right, accounts for losses.
remained broadly stable quarter over quarter. That stability, despite the huge expansion, is a really strong sign of disciplined lending and good risk management.
Okay, that's good. Any other positive signs?
Yes, a big one. Their 15 to 90-day MPLs, non-performing loans, the early delinquencies, they fell below 7% for the first time since they started reporting it.
Below 7%.
Yeah. That short-term improvement suggests early delinquencies are being managed very well. Good collections, good initial credit assessment. It usually means fewer loans will become seriously delinquent later. Very healthy sign.
And the credit cards. Growing at 118%. How's the quality there? That feels like a risky area.
It's performing exceptionally well, especially in Brazil and Mexico. They issued 1.5 million new cards just in Q2.
1.5 million in one quarter.
Yeah. Enabled by, as they put it, strong asset quality and ongoing enhancements to credit models. And what's really notable is the consistent improvements in cohort profitability. Over half their Brazil credit card portfolio is already NIMAL positive.
Okay, break that down. Cohort profitability, NIMAL positive.
Right. A cohort is just a group of cards issued around the same time, say Q1 2023. NIMAL positive means that specific group, after accounting for costs and expected losses, is now making money.
Got it.
The fact that over half the Brazil book has hit that stage shows their models are working, getting better over time. They're identifying creditworthy people effectively and managing the risk. Each new group of cards they issue seems to become profitable faster. That gives them huge confidence to keep scaling responsibly.
But I did see the over 90 days MPLs ticked up slightly. 0.5 points to 18.5%. Short term is down, but longer term is up a bit. Any concern there?
It's true, a marginal increase sequentially, but management explicitly said they're very happy with how they are evolving.
Really? Even with the slight rise?
Yeah, because the crucial context is that the overall profitability of most of our portfolios has improved sequentially and year over year. So while a small fraction of loans do go bad over the longer term, the money they're making from the vast majority is more than covering those losses, and the overall profit picture is improving.
Okay, profitability is key.
Exactly. That's why they feel bullish on lending, especially in Brazil and Mexico. The models are better. Older cohorts, like 2023, early COM24, are already NIMAL positive. It shows their disciplined approach works long-term. Even with rapid scaling, they're managing the risk within the growth.
Let's dig into that NIMAL dynamic a bit more. You mentioned the shift to credit cards pulls the overall NIMAL down a bit because cards have lower NIMAL inherently.
That's right. Credit card NIMAL is lower than, say, merchant loans, but cards are growing much faster. So as they become a bigger slice of the pie, the average blended NIMAL naturally drifts down a bit. That's expected.
Okay, any other factors affecting overall NIMAL?
Yes, Argentina's another one, actually. With inflation coming down so fast there, Argentina's NIMAL has also come down from what were frankly ridiculously high levels during hyperinflation.
Ah, normalization.
Exactly. It's still super profitable there, but the rate is lower. And since Argentina's portfolio has grown and its weighting increased, that lower nominal NIMAL also pulls down the overall average.
And how does NIMAL look geographically for cards?
It varies. Brazil, the biggest, most mature card market for them, is now break-even on NIMAL. Mexico is not yet the case, still earlier stage. And Argentina, where they're just launching new cards, they expect negative NIMAL initially, but anticipate break-even within a few years, like the path Brazil took.
And what about funding? How are they paying for all this lending? Does that affect NIMAL?
Yeah, there's an evolution happening. The mature stuff consumer merchant loans, mostly funded by third parties now. banks, investors. That cost is already in the NIML calc. Credit cards, though, have been largely self-funded from MercadoLibre's balance sheet so far. So the cost of capital wasn't explicitly shown as a funding line item in NIML.
Ah, interesting accounting.
But now they're starting to fund it with third parties. As they do that more, those external funding costs will get factored into the credit card NIML calculation. So that could put some more apparent downward pressure on reported NIML, even if underlying profitability is strong. It's just moving towards a more standard funding setup.
So, putting it all together, growth, NIML pressures, funding changes. What's the plan for issuing more credit cards? Full speed ahead.
Not quite full speed ahead at all costs. They stressed again their commitment to payback periods of roughly 2 to 3 years. Discipline remains key.
2 to 3 years payback.
Right. They're managing growth to ensure new cards become profitable reasonably quickly. They know their market share in Brazil is tiny, maybe 2%, so there's plenty of opportunity to continue growing.
Huge potential.
Massive. But they also said they are willing to slow down if models flag issues or market conditions worsen. So it's responsible growth, not blind pursuit of market share. Building a sustainable quality portfolio is the priority.
Okay, let's shift gears one more time. Advertising. Often underestimated for e-com giants, but MercadoLibre's ads business grew 38% YoY or 59% FX neutral. That's impressive. What's driving that?
Yeah, really strong performance. A few things. Surprisingly, Argentina was a big contributor this quarter.
Argentina again. How?
Better macro conditions there, lower inflation, more stock available for sellers, gave merchants more space and oxygen to invest in promoting sales, plus good execution by the local team in selling the ad tech.
Okay, so macro tailwinds and good execution.
Exactly. And more broadly, specific ad types are booming. Display and video ads almost doubled year over year. Triple-digit growth, albeit off a lower base than product ads.
Still, doubling is doubling.
Right. And product ads, the sponsored listings and search, performing really well everywhere. They're also making the tools better for sellers, like a new question flow that better explains the benefits of advertising, smarter tools to pick which items to promote, even AI-powered budget recommendations.
AI budget recommendations. Cool.
Yeah. All these things make the platform easier to use, more effective, more attractive for ad spend. So ads as a percentage of GMV is accelerating. Huge opportunity, but they're cautious, focused on execution.
That AI mention is interesting. How do they see AI impacting things going forward, both their own marketing and helping sellers with ads?
Oh, they're extremely bullish on AI, really see it as transformative. They gave concrete examples. For their own marketing, AI lets them create multiple creative versions of campaigns super fast. Instead of a few manual designs, AI generates tons of variations.
So they can test and learn.
Exactly. Test, learn, figure out who we want to show what in the online world for maximum impact. Plus, producing sophisticated online content more efficiently than physical stuff.
Makes sense. And for sellers?
For sellers, AI helps them understand the ad system, which can be complex, helps them onboard easier, and crucially, helps optimize bidding. AI can analyze tons of data to suggest the best bids to win impressions and sales, taking guesswork out for the seller. They're convinced AI will add significant value all around, making marketing better, ad products stickier.
Okay, fascinating stuff on AI. Let's circle back quickly to Argentina. It keeps popping up. You mentioned that fourfold dollar increase in the credit portfolio there earlier. Can you give a bit more context on that growth?
Yeah, the context is crucial. They were coming from a very, very small basis. Remember, private sector credit in Argentina historically is super low as a percentage of GDP, like single digits.
Right, tons of room to grow.
Exactly. So while the percentage jump looks huge, it's off that tiny base. There was, and still is, massive untapped potential for credit services.
And what about the reports of rising NPLs for traditional banks there? Is MELI seeing that too?
This is key. They said they have not seen significant impacts in their own NPLs.
Really? Why not? What's different?
They attribute it to something they call strong principality.
Principality.
Yeah, it basically means users rely on Mercado Pago so much for daily life in Argentina, paying bills, getting paid, sending money, shopping, that they prioritize repaying MELI loans over other debts.
Ah, it's essential plumbing for their finances.
Exactly. It's almost like a utility. You need Pago to function economically day to day, so you make sure you stay in good standing. That daily reliance creates this powerful incentive to repay, which helps MELI maintain healthier asset quality even when traditional banks might be struggling. It's the ecosystem stickiness again.
Wow, that's a powerful dynamic. Okay, one last thing on Argentina. The reserve requirement changes on money market funds. Since Pago's interest-bearing accounts are linked to those, what was the impact? Big deal.
It affected everyone, banks included. For MELI, they said it meant a roughly 2% reduction in what they pay users, so maybe from around 27% interest down to about 25%. An adjustment, yes, but manageable. Not something that fundamentally breaks the value prop of their remunerated accounts, shows they can navigate these regulatory shifts.
Okay, so let's try and wrap this all up. A deep look at MercadoLibre's Q2. What are the big takeaways? We saw really impressive financials, right? Strong growth, record operating income, underpinned by disciplined investment.
Definitely. Consistent execution was the theme.
Then in e-commerce, these bold strategic moves, especially in Brazil, slashing free shipping thresholds, tweaking seller fees, all aimed at driving engagement, pulling offline spend online.
Yeah, focusing on user relationships and expanding the market.
Fintech side, Mercado Pago just keeps growing users, AUM, and importantly, credit. Rapid portfolio growth, but with encouraging signs on asset quality, thanks to improving models.
Robust growth, but managed responsibly. That was the message.
And finally, advertising showing strong growth, becoming a bigger piece of the pie, with AI set to make it even more effective.
Absolutely. Ads are a key pillar now, and AI is poised to add a lot more value there.
So these insights really give you a clear picture of how Latin America's digital landscape is evolving, with Mercado Libre right at the center, proactively shaping it.
Exactly. They're not just writing trends, they're creating them, constantly refining that ecosystem.
Which leaves us with maybe a final thought. If these strategic plays, even the ones that might squeeze margins short term, are really about laying groundwork for a whole new scale of digital participation, basically moving huge chunks of the offline economy online. It makes you wonder, doesn't it? What other traditional sectors, education, healthcare, maybe even government services, could see similar transformations in the next few years?
That's a big question.
It is. It really highlights the long-term vision here. Shifting billions online, fundamentally changing how people live and interact with the economy. It's quite profound when you think about it. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Till next time, stay curious and stay informed.